It won't be surprising that if we break out to all-time highs, we're going to see a little bit of sloppiness here temporarily. So use any dips in the markets. And when I'm talking about dips, like if you get 1 or 2 days of downside, just a retest of support, like a 20-day moving average, whatever, those are buying opportunities. So buy any pullbacks in the markets for right now. Here's what you need to know before the bell this morning. Yesterday, the markets had a very, very nice rally. We gapped up to the upside yesterday right at the open. We were up about 70, 80 bips right at the open. Then the market just had a very nice gradual rise all day long. We were up about 1% by the end of the day. A little bit of a sell-off just right at the end of the day, just a smidge. But that kept us right below all-time highs. So we have all-time highs back here in really kind of mid-February, just slightly above where the market closed yesterday. So we're running into that kind of level of resistance here, just slightly above where markets closed yesterday. But again, this whole kind of trajectory of the market just remains very bullish, very intact, and importantly, what we're watching here also is, don't forget, there was the whole big headline scare that we saw back in kind of in early March, where the 50-day crossed the 200-day moving average. And that was, kind of the big death cross. And it was like, oh my gosh, that's the death cross. You need to sell the markets. This is the bear market's back. And we're now very, very close. Actually, the 50 days crossing the 100-day, but we're going to cross the 200-day here in just a few days, as long as the market just kind of hangs out where it is right now. So again, this is one of those issues that we've talked about before, those death crosses, and we actually did a whole show on that when this occurred. Back then, these death crosses don't always pretend to big, massive bear market corrections. We did that, we did have the death cross and we did have a correction, right? But that pretty much resolves itself pretty quickly. We've seen that repeatedly throughout history. The difference between when the death cross really matters and it doesn't matter is whether or not there's a recession or a financial event of some sort in process. That's when you get that's when the death cross really tells you, hey, you need to get out of the markets. We've got this other stuff going on, very recessionary signals. That's going to lead to much lower prices over time. When you're in a period where markets are actually doing well, your economy is doing strong, you're just having a little bit of slack in the markets for one reason or another, those death crosses are really more buying opportunities on the dip than not. However, saying that, in that context, the NASDAQ, as an example, though, is actually at all-time highs and right now is triggering a golden cross. So that death cross in the NASDAQ has now been reversed on the NASDAQ. So if the NASDAQ rises today, it's going to break out to all-time highs. It's literally right at all-time highs right now. But it's going to break out if we can rise. If the market rallies today some more, you're going to set new all-time highs in the NASDAQ. And if the NASDAQ gets to all-time highs, it's going to drag the S&P with it, because they basically, in the top 10 holdings of both those indexes, are pretty much the same: Apple, Microsoft, Google, Nvidia. So as goes one, will go the other. And so we're going to see all-time highs in the markets, most likely by later this week. However, even saying that, it won't be surprising that if we break out to all-time highs, we're going to see a little bit of sloppiness here temporarily. So again, use any dips in the markets. And when I'm talking about dips, like if you get 1 or 2 days of downside, just a retest of support, like a 20-day moving average, whatever, those are buying opportunities. So buy any pullbacks in the markets for right now, because the bullish backdrop, as I said, the bulls are back in town right now. The bullish backdrop is building for the markets at the moment. Now, it doesn't mean we're not going to ever have a correction again. I'm not saying that at all. We're going to have some more volatility this summer. But again, we're about to move into earnings season. We could see a little bit of slack in the markets early in the month. But as the buyback window opens back up and we start getting things back on toe, if earnings season is in line with expectations, the market should continue to do okay this year. So that's what you need to know before the bell this morning.